Now, May was the seventh consecutive month that China's central bank added to its gold reserves. This was a part of China's strategy to diversify its holdings in the face of persistent market volatility.
With a large number of trades being routed through either New York or London. But China is now offering an alternative by opening a facility outside the mainland and by allowing more gold trade with the yuan.
Credible analysis of China's own customs data, for instance, suggests its true gold imports are potentially 10 times larger than what's officially reported from some of the Western nations.
The central banks now own 27% of their reserves are now in gold. It exceeds U.S. Treasuries. So the de-dollarization theme, been in place for 5+ years, continuing to drive gold.
China's been doing something that hasn't been done in modern history. They're relinking gold directly to their currency, rebuilding how money works from scratch. And the US just quietly started bringing its gold back from London. That's not random, that's panic. For the last few years, the People's Bank of China has been the biggest buyer of gold in the world. They're buying, and their allies are buying. At the same time, they're selling US Treasury bonds, deliberately trying to damage the dollar's reserve currency status. But here's where this gets interesting. China built something called the Shanghai Gold Exchange, already the biggest physical gold marketplace on Earth. They just opened a massive vault in Hong Kong, and they're building what's called the Gold Corridor, a network of vaults across BRICS countries. This corridor will allow countries holding yuan to trade them for physical gold, which gives China's currency something the dollar lost decades ago: trust. Gold can't be frozen. Can't be printed, much harder to debase, can't default like treasuries and dollars can. And in July 2025, gold officially became what's called a Basel III Tier 1 asset. That means it now counts the same as cash or treasuries on a bank's balance sheet. The next step? Gold gets upgraded again to HQLA, High Quality Liquid Asset. That one change unlocks gold's full potential, lets countries use it for repo and financing, the foundation of the entire financial system. China has been systematically solving every problem countries had with using their currency. They're building a parallel financial system to compete with dollars. This gold-backed strategy will let China lend, trade, and develop outside the dollar and outside the West. Here's why the world is even looking at an alternative. It comes down to trust. About 70% of global reserves were once stored in US dollars. Countries held their wealth in US treasuries because they were considered the safest assets on Earth. That changed in 2022. The United States froze about $300 billion of Russia's foreign reserves. Regardless of politics, what it showed the rest of the world: if your reserves are held in dollars, they're not really yours. They can be seized, locked, turned off with a click. So countries started thinking, if you can do that to a nuclear power like Russia, what happens when we disagree with you next? Central banks worldwide, especially in emerging markets, started lowering exposure to US assets, selling treasuries, buying gold instead. Slowly at first, then faster and faster. Look at China's gold holdings chart. For the longest time, it went sideways. They bought some, sold some. But as soon as Trump started tariff threats, the chart explodes. China starts publicly accumulating gold at the fastest pace in modern history. And here's the thing. China could easily buy this privately, but they're not. They're making it publicly visible, telegraphing to other countries. Look at all the gold we've got. We can get off US treasuries. Get off dollars. In just a couple months, gold's share of reserves on balance sheets will surpass US treasuries. The dollar's share of global reserves has fallen to the lowest levels in decades. Officially, China reports about 2,300 tons of gold, but the real number is probably way higher. Bloomberg, JP Morgan, and the World Gold Council estimate China controls closer to 3,500 to 5,000 tons when you include gold held by state banks and sovereign funds that aren't publicly disclosed. But there was another breakthrough most people don't know about. In July, gold became a Basel III Tier 1 asset. Here's what that means. For decades, gold was a Tier 3 asset under old Basel banking rules. If a bank held $1 billion worth of gold, it could only count about half that value on its balance sheet. The system was designed to make sure gold stayed something banks stored and didn't use. Basel III changed everything. Gold was upgraded to Tier 1. Banks can recognize 100% of its value now. But you still can't lend against gold, can't borrow with it, can't use it for repo, the short-term lending system keeping the entire global financial system stable. That's where China stepped in. The next level above Tier 1 is HQLA, high-quality liquid asset. These assets are so safe, stable, and liquid that banks can use them as collateral for financing. Right now, those assets are basically US Treasuries, the plumbing behind every loan, repo, and credit facility in the world. If you're a country wanting to build a port or factory or power grid, you go to the central bank and say you need to borrow money. They say, deposit some high-quality liquid assets and we'll lend you the money. That collateral is mostly US Treasuries, which is why the US dollar plays such a big role in the world. It's the link to these treasuries needed to borrow money. But imagine what happens if gold joins that list. Gold goes from passive shiny rock to something that can be used to borrow, lend, and fund infrastructure, all without ever touching the dollar. If gold becomes HQLA, countries won't need dollars to finance their economies anymore. That brings us to the BRICS summit in May. For years, China's been trying to convince BRICS countries, Brazil, Russia, India, South Africa, to use the yuan in trades. Everyone pushed back with the same question. What are you backing it with? China. Our economy. We're the factory of the world. Plus, if you want, we'll let you convert yuan to gold anytime. Them. Cool. Where's the gold stored? China. China. Everyone. We're good. They'd seen how that played out with the US. They weren't going to trust China to hold their gold. At the most recent BRICS summit, China solved that problem. They built the gold corridor. Think of it as an analog blockchain. Instead of blocks verified by miners, it's a network of gold vaults verified by nations. Each vault connects to the Shanghai Gold Exchange, tracks every bar, its purity, serial number, who owns it. That fixes decentralization and trust. Gold custody is geographically decentralized, verifiable, redeemable. The second problem China solved was volatility. If you're using gold as collateral for loans or trade, you can't have price swings every day. They're solving it using a moving average to stabilize settlement price instead of daily price. Instead of pricing gold by whatever it's worth this morning, they average it over the last 200 trading days. Makes gold predictable, less volatile, smooths out price risk. Here's what scares the US. China is going to use this system to finance other countries. Think about Africa, rich in natural resources. Africa produces between 1/4 and 1/3 of the world's gold, but they don't have infrastructure. Under this system, those countries can deposit gold into the Shanghai Gold Exchange. China, through the new development bank, the BRICS Bank, can loan them yuan against their gold to build roads, airports, power plants, whatever. China finances development, builds influence, helps countries go around the West and the IMF, all while using gold as high-quality liquid asset. Gold goes from expensive shiny rock sitting in a vault to actual financial instrument you can lend against, borrow, and build on. The US knows exactly what's happening. Remember when the US started bringing gold back from London earlier this year? Official story was tariffs, or the Doge audit, Fort Knox inspection. But that never made sense. What's really happening? The US knows China's building its gold corridor, expanding vaults across Asia, Middle East, Africa. The US is like, we want our gold back too. If the world moves toward a financial system where gold has to physically move and exist, not just on paper but for real, and partner countries demand to redeem that gold, then custody becomes everything. If the US wants to stay competitive, it needs to control more of its own gold physically, instead of trusting it at someone else's vault. Officially, the US holds roughly 8,000 tons of gold, biggest stash in the world. But a big portion was stored overseas for decades, mainly in London. Bringing gold back prepares for this new system without saying, we want our gold back because the dollar might not be around. If gold becomes high-quality liquid asset, whoever holds it physically has real collateral power to fund the developing world and exert influence on it. Most financial institutions keep around 20% of reserves in gold, or equivalent hard assets. New guidelines from places like Bank of America say that should be closer to 30%. That 10% difference across the entire global financial system is estimated at about $2 trillion of new demand. You can't print more gold. That $2 trillion of new demand could translate to much higher gold prices than we've ever seen. Some say in 5 years we could see gold double. That's not prediction, that's possible reality. For the first time in modern history, we might be entering a world where governments compete for influence through better ideas of what money is. In the past, there was always one global standard, one world reserve currency. Now we could be entering a multi-monetary phase where gold-backed money is led by China and BRICS, and digital money led by the US and West, built around programmable assets and maybe Bitcoin. Money becomes something countries and people can choose. Both competing versions of what comes after the dollar, and I think both can exist at the same time. When it happens, you could see both asset prices reprice very quickly. The financial system you grew up understanding is being rebuilt right now, quietly. Most people won't notice until it's done, and by then, the rules of how money works will have completely changed.